Welcome to Blue Sky Trading,
where we break down market conditions and dive into stock analysis.
and basically all things stocks, folks.
So let's kick it off by first looking at the S&P 500. So looking at the SPY, obviously we can still see we're in a pretty strong downtrend, continuing to make lower lows, lower highs. However, did notice a couple of things over the last couple of days, especially today, that indicate we might be at a reversal point, at least for a short-term rally, if not a complete market bottom. So as first of all, one of the things I was looking at, we are at a potential double bottom. So we didn't break the June lows yet. For now, that double bottom is holding. And at the same time, we can see that the market's extremely oversold. So looking either at the RSI, see we're at extremely oversold levels, and on the MACD, same thing, we're extremely negative. But while we're getting those negative indicators there, still seem to be holding at the June lows, creating what for now seems to be a double bottom.
Another good indicator to look at is the Fear Greed Index. And since yesterday, it's been in the extreme fear category.
Right, I did notice that also. I saw, yesterday it hit extreme fear, and actually even with today's bounce, it was still in the extreme fear category or zone. And I guess the third one I looked at today, so the smart dumb money sentiment indicator, it's also at extreme levels. I checked that today, and I mean the dumb money was 84% bearish, while the smart money is only 23% bearish, or meaning 77% bullish.
So for our viewers out there, let's kind of talk about the difference between smart money and dumb money for a sec.
Right. So I mean, I hate using those terms, but I guess that's how the indicator's set up. But by smart money, they basically mean the big money, the large money. So the institutional traders, the hedge funds, and the dumb money is basically the retail investors. The smaller money is how they refer to it. And and typically the way you use that indicator, I mean, it's not an indicator that you use as a firm. Here's where you buy, here's where you sell. It just tells you the sentiment, the overall sentiment of the market. And typically when you get a delta greater than 40 between the smart and dumb money, those are considered extreme levels. And once you're at those extreme levels, usually you get some type of reversal. Where now between the dumb money at 84% and the smart money at 23, we're at a delta of 61, which is very extreme. And so I guess in addition to those three indicators we just talked about, something else that I noticed in the market that could hopefully be really good for equities. So two indicators I've been watching all year, the VIX and the US dollar. Bring up the VIX. Let me just zoom out here a little bit. So you can see the VIX has been, ever since the March peak or the COVID peak in March of 2020, the VIX has been in this nice downtrend, staying within this channel. And that's where we had the nice bull market from 2020 through 2021. And then you can see towards the end of 2021, we started to get a little bit of sideways action in the VIX. And then in November, it actually peaked outside of this channel for the first time, kind of signaling that something wasn't quite right in the market. It did manage to get back into the channel, but since then it's been in this continuous upward direction, continuing to make higher lows and maxing out around that 37 or so level. But what I noticed today, and this really gives me more confidence, I guess, that we'll get at least some kind of short-term rally, is this bearish engulfing candle that we printed today. So obviously, the VIX has been in this uptrend for the last couple of weeks, but today it opened at a higher high than yesterday, but ended up closing at a lower low, which indicates that it could be at least a short-term top for the VIX. So ideally, what we want to see, going into tomorrow and over the next few days, is a breakdown of this 8 EMA on the VIX, and either a retest of the 21 or even a break all the way down to the 50. Would be really good for stocks. If we go to the US dollar, so that's been a major headwind all year for stocks. You can see the US dollar kind of bottomed out in early or mid 2021. And since then, it's just been in this huge uptrend.
Yeah,
and
massive uptrend.
And that, every time the dollar goes up, puts more and more pressure on equities. It could be anything from stocks, bonds, crypto, anything risk related. One nice thing about the dollar today, so this is actually today's candle. This next green one is because it trades on the futures market. So this red candle, very similar to the VIX. I guess it didn't quite open at a higher high. It opened about at the same level where it closed the day prior, but a big drop throughout the day. Hopefully that indicates at least a short-term top in the dollar. One other thing I did notice over the last couple of days, actually looking at an intraday chart. So this is a 10-minute chart of the US dollar. Just expand these here a little bit. So over the last 3 days, not including today, the dollar's still been in this really strong uptrend, printing new highs almost on every 10-minute candle until it started to, slow down a little bit here yesterday. But while it was printing all those new highs, the RSI was actually printing lower highs, and the MACD was doing the same thing, printing lower highs as the price kept going up. So that indicates that momentum was definitely slowing down. That this could be kind of the last push up, before a breakdown, and that's exactly what happened today. It leveled off a little bit and then pretty quickly broke down below yesterday's low. So that definitely helped stocks out today.
I think it's a good time to switch gears and start looking at some of the individual sectors and stocks that have the highest potential for a bounce.
Basically, you want to stay away from the stocks that have really been beaten up during this bear market.
So basically, stay away from the tech stocks.
Yeah, you don't want to be buying stuff that's near its 52-week low. So you want to stay away from Cathie Wood's ARK investment or funds like that did fantastic in 2020. A few of the sectors that I noticed that are still near their highs, or at least somewhat near. One is coal. So the coal stocks have been doing fairly well. Energy stocks, so including both oil and gas and solar, which is pretty rare to see both of them going up at the same time, but both have been doing pretty good. Probably has a lot to do with just the energy crisis that we're having around the world. And then the third sector, maybe not quite as good as the first two, but still looking pretty decent, is the metals and mining. Maybe starting off, let's look at BTU. So we got Peabody Energy. It's a coal company. So when you look at the chart, obviously looks very different than ARK investment that we just looked at, which is near a 52-week low. This one you can still see it's quite choppy, but at least it's still in a nice uptrend. You can see every time it comes down to the 200-day moving average, you get this nice rally up.
Yeah, and it's important, when you're looking at stocks that has a strong trend going for it in the positive. It's very hard to time the bottom, so you're always looking for momentum in the right direction.
Right. Yeah. I'd say it's almost impossible to time the bottom. With this one, I actually did buy a position in BTU this morning. You can see over the last several weeks, really since around, I guess, April, it's been pretty much just trading sideways. It's been consolidating within this trading range. It's above its 200-day moving average. All of the moving averages are starting to come really close together, which indicates a potential Bollinger Band squeeze. So now all we're looking for is a breakout. And we did kind of get that breakout today, at least from this trend line. So what I was watching for the last couple of days, or I guess last week or so, is this pullback was really nice and gradual. It wasn't like a sharp sell-off like some other stocks were doing during the same time. It was just a nice gradual pullback to the 200-day moving average. So I had set an alert basically right above the 21 EMA and just above this trend line. And that triggered first thing this morning. So I think I got in somewhere around, I think it was right around 23.10 or so, where I bought the stock. And so I think, so the stock's up about 11.5% on the day. I think I'm currently up around 8% or so from where I got in. But basically, I'm keeping my stop real tight, just right at the low of today. If we were in a better market, more of a bull market, I'd probably be comfortable putting a stop down, at this previous low down around $19. But I think just with the bear market conditions that we're in, you really want to keep tight stops on these. All right, so moving on to the next sector, so we can look at some oil and I guess oil and gas names in the energy industry. We'll go to Occidental Petroleum. So again, this one I think is a Warren Buffett favorite. I think he's been trying to accumulate quite a bit of this stock. Actually, I think he's trying to get over 50% ownership in this company. So one of the things I like about this, actually a couple things I like about this chart. So you can see if you zoom way out, those were the March lows for COVID. I guess technically made a slightly lower low here, but pretty much a double bottom. And ever since then, so ever since about November of 2020, it's just been in this massive uptrend. And if you look at kind of how the stock reacts, so back in 2021, it had this long consolidation period, all the way from I guess March of 2021 until about February of 2022. Just trading sideways, and once it broke out of this, it gave a really nice rally. So just from the top of this box, let me change my line here. Just from this breakout level here, let's say to the highs, that was a 115% rally. So I guess that's kind of what I'm looking for it to do it again. It's pretty much copying exactly what it did on this last consolidation. It's been consolidating now since March of this year. It's coming very close to its 200-day moving average. So what I'd look for here is, I guess if it were to come to the 200-day, I mean that would be, I mean that would almost be a gift. I would definitely take a position there with a really tight stop right below that 200-day, or even if you gave it, to the bottom of this box. And theoretically, you could take a small starter position now, just based on this move. It did make, the nice part about today's move is that it did take out the highs from the last 3 days, and it's getting close to filling that gap. Actually, it's pretty much right at the gap. So if we were to get another move up tomorrow, that could signal a pretty nice move, at least up until to the top of this box. So we're looking at about $74, $75. But where you would really get the move in this one is once it breaks out of this box. Then you could expect another big rally like it did the last time. Okay, so moving on to I guess still within the energy sector, but moving on to some solar stocks. One of the stocks that I like in this sector is Enphase. So I do have a small position in this one. Again, this is a stock that, I mean, look how long it consolidated. Back from what is it, January of 2021, just trading sideways, and then finally broke out here a little while ago, and now just consolidating sideways again. Draw a trend line right there. You can see, it bounced off of that level several times. So I did take a small position with the stop right below this line, right around the 265 level. And I'd be looking to add if we can break through this resistance. So again, here, it's hit numerous times right at this 306 level. Did break through it once, but looks like it, was a fake breakout, came all the way back down to support. And now I'd be looking for, a break one more time, and hopefully on high volume, if you can get a breakout on high volume, and then look to add to the position there.
And this is a really good example, of why it's important to set those stops, right? In this case, it looked like it broke out, but it didn't, and it came back down. Entry is very key when you're buying stocks.
Yeah, that's right. I mean, the number one thing you should be looking at, when you're buying a stock is what is your risk, and where's that reasonable spot to put the stop. Where does the stop make sense based on the chart, and what is that maximum risk that you're taking, if you're wrong. And then also, what is your reward potential? You want to have a good, risk reward ratio. So yeah, that entry is key for sure. All right, and I guess the last stock I want to look at is Nucor. If we zoom into the daily, I did take a small position in this one only because you can see the lows here back in July. Had a nice rally, and this pullback was pretty steep, but so far it seems to be holding that July low. So I took just a small starter position in this one. I have my stop set, right here below 926 low, so like right around $102, and looking to see if this one can move up a little, at least break through the 8, or maybe retest that 21 EMA.
So in summary, we're still in a bear market, folks. This could be a double bottom with the potential of a bounce, or we could be in a bull trap. Again, support our channel by subscribing and turning on those notifications. And if you liked today's video, please hit that like button. Thanks again, and see you guys in the next video.